Hey, if you're looking to buy a small business, you may have heard about a quality of earnings report, and you may be wondering, how much is this going to set me back? Do I really need to have a quality of earnings report? So in this video, I'm just going to kind of outline what is a quality of earnings report, why it could be really useful to you, and then really what's it going to cost you? And so I guess first, what is the idea of a quality of earnings report? Why is it even important? So the idea here is that you would work with the seller to get their financial information, and you would have an accountant probably that would be doing an analysis on the seller's financials. They'd be asking questions. They would be trying to understand how do the financials compare to industry averages? Have they been keeping up with their repairs and maintenance on the equipment that you're going to be buying? Are you going to end up buying equipment that's just completely in terrible shape, and you're going to have all this deferred maintenance that you have to catch up on? Or was last year just exceptionally profitable, but that's not going to happen going forward? Or are these major contracts they have, are they about to end and they're not going to renew? Things like that. What they're trying to understand here is the quality of the earnings. Are the earnings that the business is currently earning and has earned in the past, are those likely to continue when you buy the business? Or are there any things that are going to reduce those earnings going forward? So that's the goal. That's what they're trying to accomplish. Now, this is kind of similar to an audit. I mean, they're going to really dig deep into the financials of the seller, and they're not auditing the historical financials per se, but what they're doing is they're looking deep into those historical financials to try to understand what the future is going to look like with you as the owner. And so this can be really, really helpful, but it comes at a cost. And so we looked at a study by the Search Investment Group, put together a study of searchers in 2023 that were looking to acquire a business, and they provided some data on the cost of a quality of earnings report here. So I've got this pulled up. 28% of those that bought a quality of earnings report spent less than $10,000, but over roughly half here spent between that $10,000 and $30,000. So I think there's a couple key points here. If you're buying a business for $250,000, do you want to spend $30,000 on a quality of earnings report? Probably not. So you're probably going to be looking for ways to take shortcuts, right? And now, if you're buying a business for $3 million, do you want to spend 1% of that cost? Do you want to spend $30,000 to make sure that there's no huge red flags in the financials? Yeah, that probably makes a lot of sense, right? So I think there's some things you need to consider based on the size of the deal you're looking at, right? The other thing I think you can do and trying to save some money here is that you don't need to do a quality of earnings report until you're pretty darn sure you're going to buy the business. So I like to suggest that you find ways to kill the deal before you engage in a quality of earnings report. So one of the things that we've started doing here at Projection Hub that I've really enjoyed and had a lot of fun with is we offer a quality of earnings sniff test, we call it. But basically what we're doing is we're taking the seller's financials, we're looking at their expenses as a percentage of revenue and comparing that to other industry standards and trying to look for any red flags. Do they spend way less in this expense category or way more in this expense category, and why? We want to try to understand why. What kind of trends do we see year over year? So we'll look at that. We're also going to look at the valuation. So what are they selling the business for, and how does that compare to industry standards? And then I think probably the most important thing that we're doing, and probably the thing that can kind of kill the most deals up front before you get too far into it, is the financing structure here going to work? And what I mean by that is if you're going to use an SBA loan, they are going to want to make sure that the deal cash flows. They want to understand if the deal cash flows, meaning that you have enough earnings from the business to pay the acquisition loan off, right? And so the way they're going to measure that is based on a debt service coverage ratio. And they want to know that you have, typically it's a 1.25 debt service coverage ratio. They want to know that you have $1.25 of earnings for every dollar of debt service that the business has. And so what we can do in that quality of earnings sniff test is model out, put the revenue and expenses in, put in an assumed loan and a rate and an interest rate and a term and any seller financing. Put all of those details in there, and then look at the projected debt service coverage ratio. Is that 1.25 or higher? If it's not, then you're going to need to start playing around with it. You need to increase the seller note. You're going to need to raise more equity. If you can't increase the seller note and you can't raise more equity, then you either need to lower the purchase price or the deal's probably just not going to work, right? You're probably not going to be able to get financing for it. And so we've had a lot of clients that have used us for that quality of earnings sniff test. And what they're really able to do is just kill the deal quickly without spending 30 grand to realize they need to kill the deal, that it's not going to work. So I always like to try to help folks figure out ways to, let's kill this quickly and as painlessly as possible, if that's the ultimate outcome of this deal. Or let's find a creative way to make it work from a financing perspective. So yeah, that's kind of our take on quality of earnings. I think super helpful, super important when you're going to be buying a multi-million-dollar business. Yeah, you want to spend some money to make sure you know what you're buying, but are there some ways to reduce those costs and be creative about it? I think there is. So I'll put a link to our quality of earnings sniff test in the description of the video below. You can check that out if that's something that would be useful to you. Most of the clients that are using us are doing that pre-LOI. So before they sign a letter of intent, they are kind of doing the sniff test idea and just, do they even want to provide a letter of intent? Do they even want to go that far? Can the deal work? That's what they're trying to figure out. And so I really enjoy looking at those kinds of deals. So I'd be happy to help. If you have any questions, please don't hesitate to reach out at support@projectionhub.com. Thanks.